you're gonna wanna sit down for this one and grab a notepad. We're talking about 5 ways to avoid taxes legally without having them feds on your tail. What's going on, man? It's your boy Jay Reed and I'm back with another video. If this is your first time here, my name is Jabari Reed. I'm a realtor and investor here in the Atlanta area. This channel is all about real estate, credit, and finance. If you're interested in those things, subscribe down below. You're going to learn how to triple your wealth through 2020. This video is how to legally avoid paying your taxes. The first 2 steps that we're going to be talking about are for those of you that own real estate. As you know, I love real estate investing as it holds a lot of benefits. The next 3 that we're going to talk about after that is tips that everyone could use to avoid paying their taxes. Step 1 is what's called a capital gains exemption. So, anytime that you go and you sell a piece of property, you have to pay taxes on it in most cases. So those flippers, those fix and flippers that you know are paying taxes on that income. What happens is if you buy a house at 100K and you sell it for 200K, then that 100K in profit, you have to pay taxes on. Typically 30%, so that means you'll walk away with about 70K. However, there is a way to avoid this. This is called your capital gains exemption. This means if you live in a property for 2 of the previous 5 years, you can sell that property for up to $250,000 in profit and not have to pay any taxes on it. $500,000 if you're married. The second way that you can avoid taxes through real estate investing is what's called a 1031 exchange. A 1031 exchange can occur whenever there is a real estate sale. How it works is you go and sell a property. That property goes to a third-party escrow account that you can then put directly into your next investment and not have to pay taxes on it. So let me give you an example. Let's say you're a flipper and you bought a house for 100K, renovated it, flipped it for 200K 8 months later. You will have to pay taxes on that $100,000 in profit. Let's say you're taxed at 30%. That means you only have 70K to put toward your next investment property. Now, let's say you did a 1031 exchange. This is how things can be different. If you bought that same $100,000 property and sold it for that same $200,000 price, instead of you getting that money directly to you, that money goes in a third-party escrow account where it is then not touched and it can be put directly into your next investment. So what that will do is defer those taxes until later. And now you have that whole $100,000 in profit to put toward that next investment. The next thing we're going to be talking about is starting a business and writing off those expenses. This applies for anyone who has a business or a side hustle or is a 1099 contractor. So my realtors, my barbers, my nail techs, lash techs, my YouTubers, my independent salesmen, and my network marketers. This one is for you. You can write off all costs associated to operating your business. So I'll use myself for an example. So because I'm a realtor, I can write off my gas, I can write off my laptop, I can write off my cell phone, I can write off my camera, I can write off all real estate books. I can write off any meals that I go and have if I talk about real estate. I can also write off my home office, my desk, my ring light, my office chair. I can write off any of my business trips. So when I go to Cali and kick it on the beach, I'm gonna stop by a California broker's office and discuss real estate. That will turn that trip into a business trip. And now I can write off all of the expenses on that trip. A pro tip I'm going to give you is instead of trying to keep your receipts for everything, just open a business account. A checking account, a savings account, and a credit card, all for your business. What you can do then is make all business purchases on your business card or through your business account. Instead of having to save your receipts for the entire year, when it comes tax time, you just submit your bank statements or your credit card statements for your business account, and all of those will be written off. The next one we're going to be talking about is a quickie. It's about donations and charity. All you have to do is take those old clothes, old electronics, old shoes, old books, even if you have canned goods, go and donate those things to charity. Take it to the Goodwill. They're going to give you a receipt for the items that you donated, you keep that receipt and you turn it in when it's tax time. Those will be tax write-off as well. The last and final way we're gonna be talking about avoiding those taxes legally is through offshore accounts. Now, I'm sure you've heard it on songs and seen it on movies. Trina just said, I got M's in the Swiss offshore. If you've seen Wolf of Wall Street, I'm sure you remember the scene where Leonardo DiCaprio was talking to the Swiss banker about moving all of his money overseas. This is actually a real thing. This is when you have big profits. I'm talking about 100K, 500K, 1 million, 10 million, 20 million. This is what you do with your money. The first thing you want to do is open an account in a country where the tax is 0. This can be a Swiss account. This can be an account in the Cayman Islands. The second thing you want to do is start a company, an incorporation in that country where the tax is 0. Now, that company is going to own the intellectual property, or IP, which can be copyrights, trademarks, patents, or trade secrets. So let's take a hair care product line, for example. Let's say you own Sally Hair Care. Your company here in the United States made $500,000 in profit this year. However, that Swiss company created the recipe. So they own the IP, the intellectual property, for this company. So you take those $500,000 in profits and you now have to pay your Swiss company $500,000. Now Sally Hair Care is not profitable this year, which means they pay no taxes. Meanwhile, your Swiss company just made $500,000 in profit and it is untaxed. When you start getting those really big profits, this is what you do with your money. I hope this video really gave you some insight on how the millionaires and billionaires of our world avoid paying taxes. People like Mark Zuckerberg and Jeff Bezos and Donald Trump don't pay a single dime in taxes, and this is how they do it. Now you have all of that same information.